Some people actually ask, what is angel investing? Because it's not as common as what people think. Really, it's an individual person who provides private capital to a business in exchange for convertible debt or equity. It's investing at the earliest stages. Got to stare it on the spot. It's investing at the earliest stages, and it's super high risk in nature. I want to talk a little bit about the evolution of angel investing over the years. It used to start with an individual person investing solo by themselves. They would generally write a check for $100,000 to $200,000. They would do a handful of these investments. Due to the high risk nature, it would generally fail. And when they'd say, this stuff doesn't work. It's not a great experience. We then evolved to angel groups, which was coming out of the GFC across Australia and a lot of other markets globally. Syndicates got together and groups of people said, well, actually, multiple minds can actually get a better decision as they're actually working through and doing investments. And they started investing together, which actually lowered the threshold for people to get involved in angel investing. But it still requires a significant amount of work and investment of time and resources and expertise to actually make those investment decisions. And it's quite hands-on and quite intensive. The market then evolved into angel syndicates. Slight variation to angel groups, whereas what people would do is back almost a single person doing the due diligence, doing the work. It's almost like a fund, but you're backing a single person. Often in a structured vehicle so that you could do a very, very small investment and get more diversified through that. But you still had to go and assess the person you were backing to do the work. You had to rely on the fact that that person was going to be around and be interested and stay involved in what was possibly going to be a 5 to 10 to 15 year investment period. And then we moved to where we are today, where what VentureCrowd is doing, which is democratizing venture capital. We're leveraging the power of the angel groups, which is multiple people being involved, and then we're letting people back those on a diversified basis on a more passive arrangement, not having to rely on a single person and therefore getting access to a group of people. The chart on my left, your right, shows you the growth of the ecosystem. This is a chart that Adrian put together, which is companies that are worth more than $100 million, starting by the decades of where they were. So the 90s, then 2000, 2010, and then 2020. And you can see a proliferation of companies because this ecosystem is growing and there's more and more money in the ecosystem. And as more money comes into the ecosystem, more startups grow, more expertise, and the whole thing feeds and becomes a bit of a virtual circle. So how does Sydney Angels actually work together? It's a group of 80 to 100 people who work together to actually co-invest in deals and actually do due diligence. Deals come through the year. We get 30 to 50 applications every single cycle. There's 6 cycles a year. The committee and the deal team review those. They filter those down to what they think are the 6 best possible deals. And then those 6 deals pitch to a deal screening meeting. We then filter those 6 deals to what they think are the 3 next best deals. Those 3 best deals then pitch to a full members meeting, and then a syndicate forms around those deals and actually does due diligence. And then out of all of that, 1 to 2 of the 3 will get invested in over a period of time. The group exists to try to help people. The group exists to help source better quality deals, make better decisions, and collaborate together, educate investors to become better investors, and take advantage of the networks that are there. So we're going to talk a little bit about the Sidecar Fund. The Sidecar Fund is what's called an early stage venture capital limited partnership. It's a terrible name, but it's one of the best things that exists for a fund in Australia because you get a really, really rare thing, which is you get tax-free returns. And it's not often that the government lets you make a return and pay no tax. And in fact, it goes one step better, that when you make the investment, they even give you a 10% rebate on the money that you actually put in to actually encourage it. It's a $10 million fund with a maximum ability to go to $20 million. I talked about tax-free. It's co-investment. So it's got the exclusive arrangement with Sydney Angels such that every single deal that passes through Sydney Angels that has DD done on those companies, those members then back up their DD with their money. They put their money where their mouth is. And so long as 3 of those members actually invest, the fund will actually co-invest alongside as an appropriate DD process has been done. It's targeting to get 25 to 35 companies. So it'll be the companies that have come through the process and any company that's been through Sydney Angels. We're going to target an investment, an IRR rate of return of about 20% per annum. Important to note the follow-on investments are actually the discretion of the committee. Key thing we want to announce is that we've done the first tranche and we've done the close, and Sydney Angels has actually invested in its first company, which is a company called iShield. See some details in there. It sounds a little bit corny, but they invented something called the kidney pajama. And it's a little medical device that actually goes around the kidney as it actually goes through a transplant. And it keeps it at optimal temperature during that surgery. It's low cost, it's really, really high margin. It's targeting the US market with 30,000 transplants per year. So that's worth about $150 million worth of revenue potential per annum just for that US market. They've got a granted patent in Japan and going through PCT phases in other markets. And they've got a clinical trial underway. The other one there you can see is a range of logos there of other companies that have been recent investee companies that are high growth, high potential, and are likely to be raising further funds in the future, of which the Sidecar Fund will have a co-investment opportunity in there. So you've got some other biotech type companies, software companies, AI companies. There's a whole lot of fantastic companies in there.
Working with the Sydney Angels and Sidecar Fund has been fantastic. As lead investors and partners, they've been instrumental in allowing us to not only raise our funds, but also in allowing us to exceed our desired minimum and raise awareness about who we are and what we hope to do.
So that was Jeremy from iShield. You can find out some more information on the QR code. We'll be around to talk a little bit later, and I'll pass it on. Thank you.